All right, good morning, good afternoon. Just doing a bit of a sound check. Just check the screen works, the audio works. If someone's in the chat early, just let me know if I'm coming through clearly. Brilliant, thanks Ken. Okay, we've got a few people ready to go. Hi Rambo, hi Ken, hi Billy, some dude, student 10, fantastic. I don't know if anyone's traded the Euro session, but it's been just a monstrous bear trend from the open. There we go, there's the time, 10 o'clock. Well, good morning everyone, I hope everyone's well, or good evening, good morning, depending on where you are in the world. Just set up this timer, you can see that. My name's Tim Fairweather, I'm a books price action trader, that's mostly the way I trade, and I'll be hosting today's webinar. So, kicked off at 10, and if you're looking at the chart, the Euro session today was just absolutely merciless. I was lucky I was trading FTSE early and I sold the second bar. Everyone likes to show off their good trades. No one likes to show off the bad ones. It's just been downwards all day. So, but it'll be interesting to see because it's a big move down overnight and the Globex range is now 100 points. So let's see, I'll go back to SPX. Very steep. So let's see, let's start from the top and let's work our way down. So big move last week, closing on the high. We were expecting perhaps a bit of a sellers above the moving average there, possible double top. On the daily, it was a bit more interesting because after ending on last Thursday, we had follow through on Friday, and then this week just unable to break above the highs. And on the daily, it's a second sell signal, but it's kind of moved. It's moved off now, so it'll be interesting to see where it lands today. On so we're about down here on the SPX. So a couple of possibilities. There's the measured move from that top. You could, possible head, shoulders, left shoulder, head, right shoulder, and but it's a big way down. I'm actually watching some of the breakout points. I think these are going to be useful for us today if we do move down. I think in terms of news, the only thing I saw, I think the UK Prime Minister says that UK is in a recession or could be in a recession. Is that what anyone else heard today? It's just I can't find it again. It's a question of the news. So we've got a bit of FOMC in 40 minutes, but it's an orange, so it's not actually the minutes. So nothing too new there. Confirmed recession in the UK. Okay, well that would explain why the FTSE is just nosediving. I think Dow as well. Yeah, that's a pretty strong move on Dow. So we've got some breakout points up here we can take a look at later on. See if there's a bit of a retrace. So possibles for today. Let's have a look at yesterday's action. So let's go to 5 minutes. So I traded the start of yesterday, but then when it started to go back to the middle of this range, I kind of gave up. I'd already done a Euro session in a trading range, and I was just dizzy. I don't know about everyone else, but sometimes I'm in the zone. I can trade limit orders, and you just in out and then scaling in. But sometimes it's just switching from long to short. So yeah, yesterday was interesting. We went. Strong move off the open, reversed down. We had a bit of a measured move down there, and it was always in short. We had a double bottom with the day before, and the bulls bought it, and then a swing from the lows. So Oh, hi, Rose. How's it going? Hi, Rose. Warned you all it was going to break. Nice. Yeah, yesterday was interesting. They got the swing. I mean, there's the Walmart trade that we always talk about. There's the scaling lower on the wedge and the 2x. I don't know if anyone got it. But it looked like a tough trading range. 2 days ago, we were stalking that support and calling it distribution. Yeah, it's always like that. It's always like that when it's the move up, and then we're about to open, 100 points down, and we'll see how quickly all the news shifts. 10-minute chart wasn't much clearer from memory. Yeah, I think I was trading the 5-minute. I tried to go up a time frame to make it simpler, and then I just kind of gave up. But if you played it like a trading range yesterday, 82, 92. So you got about 10 points. So as long as you're scaling in 10 and 15 points, the thing is though, you get caught out a couple of times, and then you realize you're always trading a little bit bigger than you should if you're going to scale in 10 to 15 points below. So the swings yesterday, so you had the consecutive bull bars. I mean, what's the distance there? That's about 10, I would think. Oh, less, okay. So playing off the double bottom, taking a chance in the swing, and you've got to hold through that, which is quite difficult to do. I'll bring up Zzw. Where are we? UKX. So Zzw was interesting because we had the 2 bars off the open, and the second bar closed on its low and below number 1. And usually when you get a bar like 1, you can expect some trading range price action, but just watching the bar close, and that's something you don't get when you're looking at the end of the day because the bar's already printed, but you're watching a bar that is just collapsing and just can't, tick by tick, it just can't get above it. So I thought, okay, that's a reasonable short. And then I managed to close down here, which was great. And then I was so pleased with myself, I forgot to get back in. So there was really no reason to not to look for another sell. I think one of the more difficult things on trend days is there's always a move like this which convinces you it's at the bottom, there's some kind of wedge, we've overshot a wedge, time to get long. But the entire day is under the moving average. So, and you just got killed if you were buying in here. Quite interesting. That's one thing I wanted to kind of point out because we had the conference. That was the last time I saw a lot of people. Let us know in the chat if you're at the conference. I had a brilliant time. Great to meet you all, and great presentations by Ali and Al, and great to watch them trade. And Al had 100% hit rate on day 2. That was his goal, was to show it's possible to have 100% hit rate, and he did. It was cool to watch. So first we had the day presentations, and then day 2 was they were live trading, and we let people ask questions, and then it became everyone could ask questions, and it was fascinating. However, the guys didn't really get to concentrate on trading so much because everyone was just throwing questions at them. So the next day was silence. They're going to trade, and we walked around answering questions, and that was brilliant. Just brilliant to watch them do that. Oh yes, I want to point out something on scaling. So something I watched Al and Ali do in the live session, and we talk about it in the trading room, and it's in the courses, is about taking reasonable signals. So we're in a tight bear channel, and in a tight bear channel, it's much easier to sell, make money selling. But you can make money buying, but you need a methodology. So one option is to take reasonable buy signals. Okay, so what does that mean? So let's say we've had 3 pushes down of this wedge. 1, 2, we've had 3 pushes down and we get a bull bar. Now, it hasn't actually gone above the high of that bull bar, so it doesn't usually count, but I'm sure many traders bought there. And the reason I say is this. We move back down, how many points below that bar? 10 points below that bar, there were more buyers. So some bulls had an order to buy 10 points below, betting they could at least get back up to the midpoint here and get out break even. This was a better buy. But I'll keep both of them there so we can see. So on this buy, traders do the same thing. They buy there and they scale in lower. But this one you have to be much further down. This is 10 to 15 points below. And then you enter in here. So you could buy above that. I'd wait for that bar. And so this swing down here managed to get back up to the high of the first entry. So if you do take reasonable entries, you often get a chance to get back out. But you've got to trade very small because if you're entering here, you are how many points above? 20 points below. You're entering down here, you need to stop below this. So unless you're trading very, very small and you're adding positions, your size will be way too big, you'll panic, it'll move down again, you'll close, you'll see it go back up and you get frustrated. But we can tell many people did have orders here because that's where it stopped. Shot up, stopped, and went back down. Was that kind of useful? I don't know. It's taken me quite a while to understand that and be able to explain it. And you know, it takes a while to practice and pull it off successfully because you've got to be doing the opposite of what's happening. But the risk return is really good. And on some days, that will be the low for the next couple of hours. So it can support a scalping strategy. Easier said than done. Absolutely, absolutely. But I know, particularly when you're just starting trading, it's even though it looks so obvious during the day, it just looks like, oh, there's tails, it's reversing. Oh, should I sell? Where's my stop? Oh, it's a big stop. And it takes a while before you just trade small and put the correct stop, or you just sit and wait to see if there'll be a reversal. And then when you look at something like this, you've got wedges and you've got bulls buying below bars. So that's 7305, 7300, 7295. So 5 points, 5 points, 5 points. So you can see where people are ordering, have their orders. And we know they're making money because the highs of those moves get back up. So whereas up here, people that entered on here, which is not a great buy at all, never actually kind of set up, they had to give up here. So got within a tick of that bar and then everyone had to go. So people lost money and then people had to exit, bears sold, and it creates momentum. How do you know? Well, this is, if I get what you're saying, I mean, the trend line is imaginary to begin with. But what happens is the computers can pick up the angle and they'll look at how many touches and how many pushes, 1, 2, 3, 4, 5. Ali gave a great presentation on statistics about the 4th, 5th, and 6th push of a trend have decreasing probabilities. So you have a spike, you have a pullback, and then there's a second leg. And both Ali and Al like to trade the second leg, but won't necessarily touch the third push. And then by the time there was a 4th and 5th, and Ali bought a very low in something that looked like this. And he had this very calm expression on his face. It was fantastic because it shot below his price. He was so relaxed. And then it quickly went back up and then moved back up. And someone asked him, how come you were so relaxed? And he said, well, because it's the 6th push. So statistically, it rarely works. So I understand the probability of taking a trade there. And he's comfortable doing it. So when it hits that trend line, because it can break through, if it breaks through a wedge, like here, for example, if we break through, we get consecutive bear bars closing below here, then traders stop looking for a wedge and start thinking, oh, okay, where's the measured move from that? So I think in general, use it. I mean, everyone can see the trend line, but look for an overshoot. I think in Al's video, when he talks about finding the best entries, he says draw the line. So he likes to draw the line where there's an overshoot. So instead of drawing it like this, find where something goes through and bounces off it, and that's how you can tell. Does that help? Brilliant. How to know when to cut when using the scaling technique? Ooh, when the pain threshold. No, look, it's when you place your first entry. Sorry, let me start again. There are many different ways to do it. For myself, I have a mental stop of where I don't want it to go to. So I'll give you an example. If this is not a buy signal, we've got 3 bear bars and then a big bull bar closing above its midpoint. Okay, so that's still a better sell than a buy. But say you entered and then you get to your second entry here. Okay, that's where you would essentially scale in. But this is more disappointment. So you've had disappointment and you've had 3 more bear bars. At this point, we're still always in short and traders will expect a second leg. So here you have 3 bear bars, you expect a second leg and you get this. And you have to be ready to exit if you get something like this. So the advantage of trading very small is that you can have a very wide stop and you have a bit of time, because when you have big tails appearing on the bars, as long as you wait till the bar closes, you've got time. But if you're closing before you execute that strategy, the size is probably too big, or you're trying to buy in something like this. The significance of the overshoot. Well, let me give you an example here. So we're moving down, we've pushed up once, now we've got a possible double bottom, traders bought it. Went down again, traders bought it. So as this trend line goes down, people are buying it. When it breaks through, this breakthrough is often not bears selling below, it's bulls not wanting to buy there. So bulls go, okay, why would I buy at 7298 when I can have an order 5 points below, or a few points below, and then buy there? Knowing that it's difficult to sell this bar because we're sideways. So the stop entry sells are up here and here. I wouldn't take this one because the bar's too big. Here, if you're selling on a stop below that bar, you're hoping this is the measured move. But it's a low probability. Higher probability in something like this is that traders will buy a second reversal up, 1 reversal, 2 reversal, they buy. So you look at the trading range. Hang on, where's the camera? Let's see in that book, that's the book I would read a lot of. It's brilliant. Rose is the queen of wedges. That's what I always think. Every time I see the word wedge, I think wedgie. Just so much high school. Hourly chart was very strong. It was very strong, and so usually we'd expect a moving average gap bar, a bar that's completely below the moving average, and it gives a chance for bulls to buy back at the moving average. But will we reverse back, or have we already broken that? Yeah, watch the videos for sure first, and then go into the book, because the book, Al's first book is reading charts bar by bar. And so the way he looks at a chart is there's so much information he can say. So every time a chart goes up, even though he might be explaining a wedge or here's a pattern or here's a failed pattern, he's also explaining every single bar on the chart. So if you don't, if you're not familiar with the terms, you'll go, oh great, I'll find out wedges. Start reading, get confused as to what you're looking for, learn all this other stuff, and then it might be hard to kind of compartmentalize the bits you needed to improve. So the videos are great for that. Which order? It's got to be trends 1. I think it's got to be trends first, I think, so you know all the terms. But yeah, I enjoy the Trading Ranges book because there's a chapter called The Mathematics of Trading, and what's the other one? Might be Best Trades, or is that in book 3? But yeah, that's a cracker. Overshoot to buy or continuation to sell. Yes, yeah, so some do. That's what I'll do it on FTSE. It's a bit easier. Actually, no. Let's use this. So let's go back to the replay. So what you're saying is, how can you distinguish between an overshoot to buy or a continuation to sell? So if we are looking at this, what's the market? What's the market structure? The tight bear channel. You might say, oh no, it went always in long, but it never did go always in long. We're behind the moving average, it's sideways, the bars are small, all the bars are huge and bearish. So much easier to make money selling, so that's what we should do. At some point it keeps hitting some of these trend lines. And what I said before is the trend line's imaginary. I mean, it's just drawn in space, it doesn't really exist, but computers can pick up the angle and play off it. So at this point, we shouldn't be looking to buy, we should be looking to sell. And if you don't feel comfortable selling low, better to sell as high as possible. Around the moving average, a good sell signal up at the moving average is a better place to enter. So the continuation to sell is if you're getting big bear bars closing on their low and then you get consecutive bear bars closing on their lows, this is not a buy signal in the style of trading that we use. If you're a computer, you run algorithms, you can scout for, in and out very quickly, you can make money, but easier to sell short, use the correct stop, and use the weapon that we have, which is patience and trade selection. That's what I think anyway, because even if you tried to buy that trend line, I think you would have got cooked. Okay, so now you get a buy signal. Okay, I'll look to get in. Oh, consecutive bull bars. A stop entry appears. It looks like it's a good swing, and then you get a sell signal. And everyone that was buying it here is a bit confused. They don't want to be long anymore. So you can sell above the bar, you can sell below the bar, but you just definitely don't want to be buying in there. It touches the moving average and keeps going. So if you resist the temptation to sell low and buy high, then you'll end up, instead of selling down here, wait for a pullback and sell, or sell above the moving average. So what do we got? We've got 7 minutes to the open for bar 17 climax. Okay, so bar 17. I'll get rid of the buy signal on the next bar. So, where's the... So are you saying to buy because it's broken below there? 1 hour EMA setting is the same, it's a 20 bar EMA. Bar 17 did not get any continuation. Yes, which is what we were talking about before, is, okay, you see that bar, is that a buy bar or is that a sell bar? And then you get, so you wait and then you get this and you think, that's not what I wanted. I wanted another bar like 17. And then we've got a gap and then we could probably go down. But that says people are buying that. So if people are buying a very big bear bar, it's no longer sell below bar. It might be sell above somewhere, but if you sold the close of 17, you're now in trouble. And you see that, and that's not what you want. And then you get some people won't sell here. They'll wait to see what the next bar is, and then it's that. So they won't look to sell straight away, but they might look to sell 5-10 points above. So they'll sell above that. But then even that, and then you get this bear bar, which is not a continuation. So before the bar closed, none of the bears wanted to hold short. So it's like this little bit, these little bits of detail here, where continuation like this, 46 has no tail on the bottom. And then when it opens, straight away, sits down. But then as you start getting tails below, people are buying below. I'm still in replay mode. See, crazy. Look at this. I mean, technically, if it's a spike in channel, then these should put on the brakes, but they don't look particularly strong when you put next to something like that. So it looks like it might go through, but so on the hourly, for example, this is a bare micro channel. So we've got bars. None of the bars go above the high. So there's potential sell signals above here on the hourly to look out for. Is that even if we do get a bounce, that's quite a tight channel. And I think we've gone past that measured move. It's easy to make forecasts and projections and then forget them all later when the price action changes, but it feels like you're doing something productive. Had a great trading week, but on Tuesday I just really struggled. FTSE had just couldn't read the price action, and then do what I do. I wake up on Wednesday, I print the chart out, and I look at all the entries. And I'm like, oh, so obvious. Buy here, sell there, measured move, swing. It's the first, and you think if only it was so easy. Does anyone else find that? I'm doing deep breathing mid-session. And you're looking and think, oh, it's not difficult at all. And you're looking and think, oh, it's not difficult at all. Yeah, the memory of what to do, it just vanishes. It's like, selling support and buying resistance, doing the absolute opposite, getting killed in each direction. 2 more seconds. Highly recommend Tulsi tea. That's my de-stress, no caffeine tea. After the coffees and the green teas. So, opening in about 30 seconds. That was great about being in the States. I stayed an extra week in San Francisco and I got to trade like a regular work day in the States to get up early and trade. That was brilliant. So, because I can't drink coffee during the US trading when I'm in Taiwan because it's late at night. So, where are we going to open? All the way. It's like a little dot down there. There we go. I'm not sure if it was Al or Ali at the conference. They had the bell, like the opening bell, and they would play the audio. I don't know if that was a program, but I thought it was brilliant. I might. Big gap down. So what I recommend for most of the traders in here is if you don't have the Brooks Encyclopedia, definitely get it. Every time I go into this, I find new stuff. It's just amazing. I've been able to trade without it. So, 4 common outcomes. All 4 of these are essentially sideways. It's not super clear. So if you can resist pulling the trigger in the first 5, 10, 15, 20 minutes, or if you do trade a smaller size, because the bars are usually bigger at the start, so if you take a loss, it's more difficult to get it back. So a lot of, is the word regression to the mean? Just going back to university. Moving back to the moving average and then looking to see where to go from there. So a gap down, double top, and then we've got a second entry sell here, and then it pulled back up and had another second entry sell here at the moving average. So one possibility. Another is a wedge top, so 3 pushes up, and then a sell signal at moving average, which was what we were talking about earlier with the in the wedge bottom example. Move down and double bottom, and that's the new low of the day, or a wedge bottom and a move up. So there's some of the possibilities. So what do you do here? Bar 1 is 10 points tall. So can you buy bar 1? Well, at the moment, I think it's probably better to wait for information. Because if you imagine a gap down here, it's a gap, there's nothing there. But it's essentially a gigantic bear bar that's about 80 points tall. And as I understand, the market needs to interpret that information. At the moment, we've only got 4 points, open, close, high and low of the first bar. So if 1 is a big bull bar closing on its high, can you buy it? I mean, it's reasonable, I think, for a swing, but I rarely buy the first bar. I just, in my own trading, when I go back and look at, and I encourage people to look at your own trading day and plot your charts, plot your trades on a chart, and really look at where the best trades were that day. And for me, it's rarely bar 1. So quite infrequent. Someone asked me, what if you take so many trades, it would take ages to plot your trades on a chart? You're potentially overtrading. You know, general advice, if there's so many trades that you can't put them on a chart, you've probably been shooting in both directions. So just for anyone that's joined the broadcast on the Albrook satellite, we've got a daily breakout point here. So common to dip below breakout points. Frustrating anyone that bought one of those break and retest Forex courses and you're wondering why it didn't work, because a lot of the time it tests below and above points before it realizes it's gone too far. So, and we're stalling here, but it's been pretty bullish. You know, all the news this week, economy's recovering, it's fantastic, bear market's over. And now I've got a day like this. So on the daily, it was a second entry sell and possible magnets. We've got that breakout point. We've got the prior breakout point down here, and we've got the daily EMA. So on the hourly, sorry, there's a lot on this chart. One of the problems with trading views is it's just very easy to draw things. So some possible magnets in here, but I think I'll just wait to see the first few bars before we get too deep into it. So bar 1, bull bar closing above its midpoint, but a big tail on top. So probably reduce the number of buyers directly above that bar. They might wait for a second one. Traders are looking for direction. So if we get 2 bull bars, they're big, they're closing on their highs, they look good, not too much overlap. They might take a chance that we're always in long. But we don't have to go straight up to the moving average. You know, as Al says in his trading room, we can go up to the moving average, or the moving average can come down to meet the price. 20 bars, it'll get there. So we might go sideways when people work out how to process this gap. Typical trading day, what is a lot of trades? Look, it varies. I think for me, if I'm switching direction too much, that's when my trades all of a sudden will go up. I'm not sure on a particular number. I mean, in terms of positions, let's say 10 positions, but there might be scale-ins, things like that. I don't know. I'd have to look back at the actual number. But if it was 20, 30, or 40, then I will feel I didn't really know what was going on. There were probably easier trades. So what's happening on 2? 2, we went above 1, and some traders decided to sell. So we went up less than 5 points. Not everyone kind of counts points and the movement. For me, I find it's helpful to work out what people are scalping or what's a reasonable target, because every day is a bit different. If these bars are 25 points tall, then entering a position for 5 points is not going to make sense, because I'm going to have to risk at least 20 points at the top or bottom of a bar. So they can help you kind of target what you're doing. Why would traders sell 2? Tail on 1, big gap down. Bears is like a bear trend from the open. But probably more likely to go sideways for a bit. Do you think we'll have another trading range? No one knows. Rose knows. She's pretty good at this stuff. But Rose, where was your projection for today? You put a chart up before. Oh, so you had the measured move. Is that a measured move from the 40-40? Is there anything two could do to make you sell? I think for a lot of traders are trying to perfect their skill or improve their skill. Listening to Al, to Rose, to Brad, how they talk through each bar, and it's interesting what some of them say. They say, okay, is there anything this bar can do to make me sell it? So for me, because bar 1 is a bear bar closing above its midpoint, I'm not looking to sell 2. If there were consecutive bars on 2, 3, 4, that might change, or we go up and start to reverse down. But 2's looking more like a bull bar. But it's almost entirely overlapping. So I'm also not really looking to buy 2 if it's spent the whole time of this 5 minutes right in the middle. Okay, so no red views today. So gap down. So what are some of the possibilities for the gap down so we can get an idea? And interesting, Al got asked lots of cool questions, and I didn't think my question was very cool, but it was cool to me. I said, do you actually use your own encyclopedia? And he says, all the time. He said, that's how I assess probability. So if Al's got this open, assessing probability, I feel like I should. So if you want to increase your probability, I would have this open. So this is what a bull trend looks like. Very little overlap, bull bars, body's getting bigger, no bear bar for the first 6 bars. No bear bar for the first 6 bars. So when we look at the first 2 bars here, at the moment it doesn't look like a bear trend, sorry, a bull trend from the open. Tails 1, 2. Probably sellers above 2 and 5 points above. But let's see. Being so far below the moving average, I'd like to say it'd be better to be looking to buy, but the price action doesn't say that at all. Bear trend, so we had bear trend days, sideways, and then we got 5 bear bars in a row, 6 bear bars in a row, 5, 6 bear bars. And the bulls get very, very good 5-minute bars. Here, bull surprise, pair of bull bars. Each one of them got sold. I didn't touch the moving average till very late in the session. So that's the bear trend all day. This is a very tight bear channel. We've got overlapping bars here, and that kind of signifies trading range to come later on. So signifies trading range to come later on. So bar 3, so we've got a 10-minute bar, bull bar closing below its midpoint, and bar 3 looking like it's going to be a 15-minute buy signal. Where's the, oh, do I just not have the Globex low on here? Low, get rid of it. So most days break out of the Globex low or high. I think Al says about 10% breakout of both and 10% breakout of neither. This is a big range, so part of me wants to say we've got a better chance of breaking through the Globex low first, but it's such a large range, we might float around the middle. What do you do here? 2 dojis, so it's not a buy signal for me. If you do buy, you need to stop above 1. I don't think the probability is all that high. One thing that was quite cool, Ali had his, I think it's the order flow, it's like the tick chart, and it goes up and down. I don't have it on my trading console, but It always looks very exciting. And he took some momentum buys. So instead of waiting for a bar to close, he bought as the bar's forming. And he was saying he was watching the tick chart just keep moving up and never come back. And he watched that move up to the bar and thought, okay, that's a buy. So when you're looking at these bars form, what's the urgency? Is it spending a lot of time at the bottom? Is it racing up to the top, or is it sitting right in the middle? So more like a trading range open. That's on the overnight. Let's see how it closes. We've got 20 seconds. Could be some patience developing trading today. So 5 seconds to go. How does this bar close? So urgency right at the end of the bar, but not able to get above the high at 2, so it's an inside bar. So not good enough for the bulls to buy the close or buy above. Bears know that, so they sell. But this range is barely 5 points. So you know, we've got to get the spread in and out. So it'll be very difficult to make. So it's inside bar, so it's breakout mode, so it's 50-50. Probably, let's say, high probability will go up, but a lot of dojis, so I'm not expecting people to hold through for too long. Let's see. So we're on the buy above 3. I'm watching to see how far we get. So if 4 looks like 3, closed on its highs, then we'd be technically always in long. But bear in mind how much movement's been happening in the last 10 seconds of the bar and in the first 10 seconds of the bar. 3 sold off straight away, came back. 4 sold off straight away, came back. So So 15-minute chart, big bull bar closing near its high. I think the 15-minute chart's very useful, same with the 10-minute. And I like to use it during the session. But if you are struggling on a 5-minute chart, adding more charts might add more confusion. So for myself, if I'm trading the 5-minute, it doesn't make sense. But the 10-minute does. For the rest of that session, I will usually just use that time frame. I won't switch back between 3 to try and find more signals, because you'll generally just cut all your winners short and get confused. So can the bulls get consecutive bull bars closing above the midpoints? So 4, shot down on the open, shot up, and then coming back. So confusing. That's your 2x swing that the bulls would love to get. If the bars were big, closing on their highs and had 0 overlap, I think that would be reasonable. But if there's a bull move and a pullback, I think that'd be easy to get in. It's a good question, Jay Hoss. I might defer that to Rose. I don't actually trade SPY, so I can't confirm that. Some instruments I've traded kind of use multiples of 4. Some seem to work multiples of 5. I know like FTSE and S&P 5 seems to work, but I'm not sure what the standard is. That's a 50-cent move in SPY. Okay, great. So traders that bought 3 were hoping for 4 to race up are now back at their entry. So if 4 is disappointing, what might they do? So consecutive bull bars, big tail on top. Can you sell here? For me, it's not a sell signal there. I think you need a fairly strong sell signal. Al says, if you're going to be selling this far below the moving average, you need something that's above average bearishness. And there's been, apart from a small bear doji, there's been no bear bars. So how do I get to the encyclopedia? On the, let me see if I can find the link. Oh, good one. Thanks for those stats. They're great stats, those one. It's not Brooks price action, it's Brooks. There we go. There's the link. Check out the sample. The sample's actually got some great slides on it. Greater than summary. So the sample's actually got some great slides on it. Greater than summary. So what do you do here? You've got 3, 4. You've got consecutive bull bars, but big tail, but still going up. So bullish, but not strongly bullish. What if we get 3 bull bars, 4 bull bars? If you're trading always in, then you've got to get in. So maybe some traders got in above 2 and 3, but to me it doesn't look always in there, it just looks sideways. So traders that bought 3 and on 4, not happy with the tail on 4. So is this bear selling or is this bulls exiting? So probably a bit of both. Can you buy below 4? You're in the middle of a trading range. I think probably best to wait. In general, if you're in a trading range, which I think 5 bars doesn't classify for me, we want to be buying second entries at the bottom, selling second entries at the top. But all 5 bars have covered the same prices. So we might be, what are the breakout points over here? If 5's a big bear bar, can we sell it? Well, we've been sideways 4 bars, so I don't think you can sell that. I think with the information we've got available, we're probably coming back to this price, probably on the next bar and the one after that. I think you probably have limit buyers, several points below 4, at the 2-3 low, at the 1 low, 2-3 low, at the 1 low. What's WGT? I thought I was quizzed up on all the acronyms in the Brooks course, of which there's a lot. So bear bar closing near its low, but not closing below 4. So we're right at the midpoint. If I draw that again, I think we're at the midpoint, yes. So not super clear either way. You know, computers just selling, trying to make a few points down, and you'll have bulls trying to buy a few points below. Can you sell 5? I mean, 5's a good looking sell signal. Problem for me is it's the only real bear bar we've had all morning. So will it be the one that works? As I say that it works. Hopefully you already exited. What are we, a tick off the, yeah, we're 1 tick off the 1 low. So it tells you how bearish we are. Everyone ready to close. So what if 5, 6 are good looking bear bars, possible swing down? I think I need to see a pretty good bear bar and a follow through bar to believe there's a swing short. Did they get their 5 points? 22. Just. So what's going to happen at the one low? Will bears stay short? Hoping for a swing down. Yeah, overnight low is a magnet. What's 904? So 6-7 points away. I think it's going to be difficult for the bears to hold short. Maybe it's a bear bar, we get a second leg down, but pretty far away from the moving average. Let's see. Let me put the Globex low on here. Is what, 3904. So it's basically 5 points below here. Maybe. So bull's giving up, looking to buy 5 points lower. Can you sell? Well, 5-6 consecutive bear bars. But we're at the one low. So you're risking 15 points for your possible 5-point target. So I don't think the trader's equation is good enough. Oh, you've blown my mind. There you go. Blown my mind. Thank you very much. Thanks, Oliver. So close enough to the Globex low. Will we get down and tap into it? Let's see. Close of the bar, traders buying it. Bulls want a possible double bottom. I considered buying there, but I generally don't like to buy consecutive big bear bars closing on their low. It doesn't always end out how you'd like it. And then you can spend the next 20 to 30 minutes just scaling back to break even or a small profit on what was just a bad entry. So what do you do here? If you're selling, so you're selling 5-6, hoping you're going to move down past the Globex low. We're probably always in short. I didn't like it that the bar didn't close below 1. We just stopped short there, so questioning how bearish this really is, but I'll change my mind if we get a decent follow through. Moving average screaming down to where we are. Will we go sideways and then continue down to some targets? Let's see. We've had 2 15-minute bars up, down. So not too much information there. And a very tiny 30-minute doji. So yeah, so we've got a couple of breakout points. There could be magnets there, but let's see what happens here. Can you buy 7? 7's a reasonable looking buy signal. I think bulls will buy it. Possible double bottom, far away from the moving average. 5-6 probably big enough to get a little bit more down, but certainly not out of the question. If 7 gets too big, less bulls will take it because we'll be back up into the middle of this range. So I think some bulls made 5 or nearly 5, 1-9. Yeah, thanks Oliver, thanks Gav. That's brilliant. That is just brilliant. What do we do here on 7? So we're still on the sell below 5. If you sold 5 and you saw 6, you're pretty happy with yourself. If you're still in, it's not doing what you wanted it to do. So if you didn't close quickly, then this bar could race up. So looking like a reasonable buy for signal. What can often happen is people see the double bottom and looking for a buy signal, looking for direction. You know, we've got a double bottom, we're in a gap down, so potentially more room to go up. And the bar will race up before it closes. So it's 3 points, 4 points, 5 points, and then it's 9 points tall. And then you have to make a decision. Am I buying above a good buy signal right in the middle of the trading range? And actually, that's not quite what I wanted to buy. And trading ranges do that constantly. And you've got to be really disciplined, have a really clear plan. Otherwise, the trigger finger will just kind of put you in trades you don't want to be. You get in, moves a tick above, reverses, and you've bought in the middle of a trading range, which is as fun as it sounds. So I said on 4 we might spend some time with this price. I said it on 5. And now we're coming back to this price, right in the middle of this range. So decent buy signal for the bulls. Didn't quite get above 7, and pretty big, 21. Nearly 10 points tall. So some traders will buy for swing up, and some will wait to see what happens on 8. Some might buy lower and look to scale in, but 5, 6, pretty strong. We might need to go down to the godlets. I'm currently flat. I'm looking for direction. It just sounds like my report card from school, but let's see. Okay, so on the 15-minute, we're outside bar. Maybe we'll get an 00. Traders C7, the bulls are happy, and they're doing this, not racing up like they wanted. Do I stay up late? I try not to, but I'm generally pretty clued into my energy levels. So if I feel like trading's going well, then I'll stay up. And if I've already traded a fair bit, and that's helped me a lot, is not forcing myself to trade. If I'm not feeling my best, or feeling a bit tired, I don't trade. It's a really easy way to lose a lot of money, to push through. I don't know what everyone else says about that, but yeah, for me it's a nightmare for trading performance. So no surprise there. The 1-to-1 for that bull bar is right off the 3 close right up the top there. So keeping the probability 50-50, the computers. If I'm not talking at the same time, which is very rare, but if I'm trading by myself, 10 and 15 minute above and below bars are great entries on the open, and I'll often do that. So you can see there on the 10 minute, buying below bars, selling below bars, selling above bars, and you can get some good scalps there. It's not as clean as it is today, but yeah. But obviously trade small, because you're trading a 10-minute bar, all the bars are much bigger. 15 minutes, 6 cents. I haven't heard that one, but yes, absolutely. I asked some of the guys and girls before, but who was at the conference? Who in the room was at the conference? It was, yeah, it was good fun. They'll definitely do it again. I think they're a bit surprised. They weren't sure whether trading live would work, and then yeah, they were both really rapt, and really good response from everyone. So and there was a mixed locations. There was a request to do it in Brazil. I think I've been pushing for Asia. I think US course can be on there. Met a few token Aussies. I'm pitching for Australia first, for Asia first. We'll see if we can get it down there. NYC, oh, Istanbul, that'd be very cool. Oh, that'd be super cool. Definitely go to that. NYC, yeah, that'd be fun. Oh, great vision. Yeah, how'd you find it? Ross has already pressured him to find to go to Istanbul. That's great. So what happened on 7? The buy signal, it was great. It was right in the middle. No interest on 8. Can you sell below 8? I think the tail's not really that compelling. I think probably more buyers down there looking for a second entry, but range is very tight. So last time I was on the stream, I showed some slides about some of the methods I use to improve my trading. Nothing absolutely, not rocket science in terms of method. It's more about the discipline of going through your past trades and reviewing your likely mistakes. The good news is once you start plotting your trades on a chart, you realize you're making the same 3, 4, 5 mistakes over and over again. It's just a different flavor of that mistake. So if you get used to that and you know you have a tendency to fight a trend, enter too early, turn scalps into swings, swings into scalps, whatever is your particular flavor of mistake. And I said it's hard to do because you're looking at the chart of all your mistakes, but it's kind of cathartic because you've paid for them. So if you have lost a lot of points on a day, at least you've got something out of it, apart from a bad memory. But interestingly, because a guy contacted me after the session and said, oh, hey, look, I'm having a bit of trouble. And I said, well, look, I can't really give like general trading advice, but plot some of your trades on a chart, send them through, and we'll have a chat. Anyway, so he sent me a couple of charts, and it was brilliant that he did this. However, he identified the best swings of the day. And I traded that day, and I didn't get, my entries were nowhere near his. I said, wow, these are fantastic entries. I mean, I've really got nothing to say except, maybe you can teach me how to do this. Like, did you really take those entries? He's like, no, I'm just practicing marking up the chart. So I said, I'll just plot your trades that you actually took. Now, I haven't heard from him. And that's the point, is that the mistakes are difficult to face and the ego will switch on you a lot to make it look like you don't need to check them out. So, he did the right thing, but even putting the mistakes on the chart. So I hope I hear from him again because it's very useful. So let me know if anyone else does that. I think it's super valuable. You got an undercover Discord sending me fake charts. Hey, look, yeah, I sold the high here and got out of the low. Do you think I could improve this? It's like but it was funny because he sent me 3 days. It was like, when Al and Brad mark up the charts at the end of the day and it's like the best entries. I was like, man, this guy's really good. All right, I should go to get in his course. So traders buying below 8, I think is an okay limit buy, but we do have the Globex low below, so it's not a high probability buy in there. I think you're probably just buying because you might be bored. But now we've got an outside bar. And if we do a lot of tight trading range and just hover around this number, I'll get some. I've got some slides. It's interesting to hear Ali's speech. He was talking about some of the indicators they use, which color the bars, and it's put our system into like basically an overlay for the chart, which is pretty cool. And all his statistics about breakouts and second legs, and yeah, it was brilliant. A lot of stuff about outside bars, inside bars, outside bars. So interested if anyone's in the. I think he has a program as well. If anyone's in the room, interesting to hear, more about inside and outside bars to share. So another bull bar, outside bar not closing above 8, but probably good enough to get to the top of the range. Above 8, but probably good enough to get to the top of the range. So if you're long, where do you want to get out? Probably at the top of those bars. So can you sell up there? I don't think so. I wouldn't sell just yet. So we're still on the buy above 7. There was the buy below. But you're risking 6 points to get. It was about 8. Probability not great. So there's a pullback from 5-6. Double top move down. many bull bars, but not able to move through the price. So. Speedo, yeah, great for the developing patience, the trading ranges. So racing up to the top. So will the bulls exit or stay in for a possible swing up? So a lot of overlapping bars. So the tendency is to kind of get bored and make an entry appear, read into it a lot, start counting high ones, high twos, low ones, low twos, but you'll get dizzy, and there's a good chance you'll do the wrong thing. So what happened on 10? We got up within a tick of their entry and they closed. So the same thing happened down here. We got in, as soon as we got to the edge of that range, they exited. Correct, 8 points each way, yeah. So what's interesting is if you are scalping and you're under a trading range and you can see that the targets are shrinking, goes from 10 to 9 to 8 to 7, and starts shrinking down, and then you'll resist the temptation to be trading in the apex of what is a triangle, where both sides are unsure of where we're going, so it squeezes the targets and the computers kind of take the momentum where it needs to go. Can you buy? What if 10's a big bull bar closing on its high? I'd like to see it close out of this range. Something get out of this range. It's no surprise it's a measured move up to the moving average. So if you're buying 10, you're essentially buying for a swing because you've got about an 18-point stop loss. But we broke out above the highs. So closed above the highs, so we've got some traders buying the close. You might have bears 5, 10 points high, but probably okay for a move up, but I want to see a follow through out of this range. Ali is Ali Moin Afshari, so he's a student of ours. For many years he has, and he runs a hedge fund, and he uses our system, and he's excellent if you get a chance to hear him speak. He's got a lot of materials, and he's written some great articles on the blog of how to become a successful price action trader. In fact, I'll put the link for that. That is a great that is a great post. So 10, full breakout bar. So traders deciding, will we get a little push up to the moving average, or are we going to stay stuck in this range? If you're buying here, you've got to trade small because you've got a very big stop. So I'm currently flat. I'm looking for some kind of follow through out of the range. Let's see if I can get this article. Here we go. It's a beast, this article. Absolutely huge. Absolutely huge. This is why I was hesitating to buy 10, because I don't want to buy at the top of something that does this straight away. So I'm looking for 11 to confirm the breakout, or see that we've got some kind of gap here. But because each bar today has touched this price, I don't want to end back there. So we're on the buy above 7, or maybe you waited for another bar, 8, 9. I don't think 8, 9 is a great buy signal, but it seemed to work. Magnet being in the middle of that range. We've got the Globex low, and we've got the moving average. So that could be 1, 2, 3. That could be the trading range we're looking at. Bull's wanting a reasonable bull body here. I'll do Richard and Ken a favour here. They're sending out a survey about the workshop. So if you get that link, please don't archive it. Please click it so that we make sure we get all your feedback. So I think it was Vision. There was a couple of people in the room who were there. Please answer that survey. That'd be really helpful. So this is trading range type behavior. You get a bar like 10 in a trending environment. Traders are dying to buy the market, buy a few points lower, buy above. There's urgency. But this has been ticking down all the way for 4 minutes. So let's see what happens. Keep the room warm again. I think that was actually my fault. I think it was an Aussie thing. So I said, can you put the temperature up? And she said, oh, the air conditioning. And I said, yeah. But I think she meant, she took that as air conditioning up as in make it colder. So I'll just blame that on being an Aussie. It was to keep everyone focused. No, I'm kidding. It was just miscommunication. So is it second entry sell? I think 10 is probably big enough to reduce the number of people who want to sell immediately on 11, and we've still got a gap open. So what will happen here? Will we keep the gap open and then keep moving up? So tail on the bottom of 11. What do you do here? Buyers below, sellers below. Are we doing 2 pushes up? Let's see. Something like this, wedge top. 1, 2. Feels like it's always in short, but then pulls back and then you get a move down. Let's see. So what do you do here? 9, 10 consecutive bull bars. Consecutive bull bars, and then we've got bad follow through 11. So what happens on 12? If 12 isn't bullish, bull bars, and then we've got bad follow through 11. So what happens on 12? If 12 isn't bullish, at all, will those traders that bought 9, 10 give up? Or moving average is 8 points above. So we've got above 11. Some bears giving up, looking to sell 5, 10 points higher up at the moving average. Thinking it's not all that bullish. But I think it's probably too early to sell just yet. What was quite cool about watching 2 traders, because Ali and Al couldn't see each other's screens. Like, we can all see it because it's butting against the wall, but they're looking at their computers. And it's interesting to see them trade at similar times, but often doing different entries. It was like the same signals, and someone asked Al about that. So it was quite cool because you were seeing the same price action, entering it differently, but at pretty much the same inflection points. And he said, yeah, if you get 5 to 10 traders all trading different systems, you'll find they're all entering at similar times. So they've got a different way of reading the price action, but the signals are similar. So I thought that was quite interesting. So if 12 can close above its midpoint, preferably close above 13, that'll attract more buyers. But it's sideways. It's trading range action. So I think if you are going to enter, you need to be trading much smaller than you usually would, and be looking to save part of your position in case you need to firm up your entry. So for example, instead of selling the high of a bear bar, look to sell 5 points or 4 points above the high of a bear bar. So assume there'll be a scalp, and then people will exit, and then you can get back in the other way. That'd be one way to trade it. if patience is difficult, which I think it always is. So big tail on 12 is going to make it more difficult to buy above 12. Bulls wanted to close above 13. Jay Hoss, that's great. I haven't taken a trade either. I think it's great. It shows great discipline. I know some people have probably taken 15 trades already. I used to be one of them. An even mix of buys and sells. Ray Game, that's really funny because someone asked Ali, how do you prevent overtrading? And he's like, actually fold your arms. I thought it was the best. So good. Just take, he's like, I can see everyone, you know, everyone's waiting for me to announce the signal. He's like, you need to take your hands off the mouse, off the bias, you know. Can lead to overtrading. So what happened on 12? 12 broke above its midpoint at the 13 high, not that bullish. Some traders sold. If 13's a decent bear bar, then you've got another sell signal. So I think also if you've got a problem with overtrading, one thing to do I would recommend is increase your trading size. So you might be overtrading on a small amount, but you're basically training to keep pulling the trigger. So it might be you need to experiment with your trading size, actually increase it. So you're like, okay, is this, and then you can watch that basically vanish in an instant, and then you kind of learn by that feedback. And then you can watch that basically vanish in an instant, and then you kind of learn by that feedback. Looking a little wedgy, yeah. Couple of pushes up, little wedgy, yeah. Couple of pushes up. I think it's no surprise that the most impulsive move was 5-6, you know, given it's about an 80-point gap. What do you do here? If 13 closes below 12 or closes below its midpoint or closes with no tail on the bottom, that's going to attract sellers. You're selling basically at the high of the day so far, but you do have a magnet above. So might be worth waiting for a sell signal and then waiting to sell slightly above it if you get a chance. Yes, Rose, you've been elected the head of gifts. Yours are amazing. My selection seems to be small. I'm going to blame the selection, blame the tools. But on the phone, I've got hilarious ones. You'll be looking to do your gift training course. You just need to have access to it when the urge strikes. So 13, getting below 12, still a minute and a half to go. Richard's onto it. See, Richard, I told everyone about the survey. Trying to get that out. So what happened below 12? Not as many sellers as we thought. So still gap open between 9 and 11. Yeah, Eddie, Brazil got picked a lot for the conference. I think that was great. So bears want to keep this bar closing on its low at 13. It's a second entry short up the top of the day. Will the bar close back down in the midpoint of this range, forcing you to sell very low? I think it's a better sell above, personally, but I'll see what 14's like. So what's happening on 14? Where were the stop entry bears taking the price down? So you've got bulls seeing 910, targets above, looking to buy 5-10 points below, 5-10 points below the highs, betting that we'll have another leg up, maybe create a wedge. Not a lot of consecutive bars, so terrible for stop entry traders. If anything, you need to be doing the opposite. So this is a big bear bar, that's why people are buying it. Not a lot of continuation. So, hey, that photo looks great. Trade half days. We had sideways price action at 39.22. We had sideways price action at 39.32. We might just jump 5 to 10 points up to the moving average. We might just jump 5 to 10 points up to the moving average. Not sure my sell at the higher of 13 is going to get filled, but I can be optimistic. What do you do at 14s? A bear bar. Well, if it looks like 13, we'd be back to always in short potentially, but we'd be back in the middle of the trading range. So traders deciding whether they want to swing down. 14 looking like it's going to be the smallest possible body that this program can draw. Nigh on invisible. So probably not a great idea to be trading on stops. 14 looking like it's going to be the smallest possible body that this program can draw. Nigh on invisible. So probably not a great idea to be trading on stops. Big bear bar, pause. Consecutive bull bars, pause. So consecutive bear bars, good for the bears, but shrinking bodies, not great. Still a small gap open, not great. Still a small gap open. You might get biased here. I mean, I wouldn't recommend a buy. I think that the stop's too ambiguous. But so consecutive bull bars on the 15-minute chart. A lot of ground to cover above. 30, 40 points. 10-minute chart, so probably sellers at the 14 high. But all the bars are overlapping, so I generally won't trade with limit orders in that way. I prefer to trade with a limit order with a range that's expanding as opposed to overlapping, because you'll just be entering in the middle of something. What do you do here? 12, 11, 13, 14, 15 is another bear bar. Reasonable to swing, but it's got the same issue in that people don't want to be selling in the middle of a trading range, and we've got magnets above. So bars 14 to 18. Again, we set up another swing. Rose put up a great topic the other day about homework on the weekend about the different times of day she looks for swings. So it was really useful. I think by bar 15 or 18, 80% chance the high or the low of the day is in. So is 7 the low or is 12 the high? So a swing strategy is, I think, great for your trading account, because even though you get them wrong, because they're only 40% probability, you put your mindset into thinking, okay, where's the rest of this day going to go towards? So I think it can reduce you fighting a trend and looking to see where the next trend's starting. So shrinking their bodies here. But if you're trading always in, and you sell below 15, it's a bear bar closing on its low. We've essentially closed the gap here, and we're back in the middle. So I'll probably wait. My sell order is far away, so I might just delete that. Is there something 15 can do to make me buy? Let's see. Potential high 1 above 15, but dojis and tails. So 15 would need to be a really good bull bar, I think, for traders to buy above it. Potentially sellers up there. And the fact that it hasn't gone above the 14 high. So we'll just go sideways to down here. Let's see. Yeah, that's true, Ray Game, about the stop orders are low probability. In fact, if you have been caught in enough trading ranges, you realize that the stop entries, the always in entries, are the ones that go one tick in your favor and then reverse. They become the reversal signals. So it can be super confusing. So as traders, I think what we're trying to do is, I mean, the market, you open any chart at any time. It's basically sitting at 50%. And we're waiting for the edge to flip. Do we want the probability? Do we want the risk reward? So we've got 3 consecutive bear bars, not particularly big, but now there's 3 of them. So potentially always in short, looking for a swing down, might be forming some kind of expanding triangle, kind of reasonable. I think the Globex low is somewhere down here. Now everyone told me where the low is. Yeah, somewhere down there. So is this bear selling? Is this bulls giving up? I don't think 15's a great sell signal. But if you're a bull and you're looking to buy, better to buy low. So we're back down to the swing setup down here. And if you're a bear and you didn't take your profits, you may have just missed your chance. 24, I probably still got a moment to go. And that's why the computer has a massive advantage, because if you haven't set your target in and you're looking to press a button, it will go past the price before the chart even updates. So let's look at an expanding triangle. The X, no, expanding. The X, no, expanding. Oh, it's probably in triangle. It's not easy to get around the encyclopedia, but once you get your head in to how it's laid out, it's fantastic. This was one of the slides that Al went through in his presentation. He picked a couple of the great slides out of his encyclopedia to go through. So talked about triple tops and talking about the building blocks for all trading, the wedges, the doubles, the breakouts. So I think Al looks for 2 reversals for trading range open. So we've had 1, 2. So we've got a double top, and now traders will be looking to see what happens down at the 1 low, the 6 close. So price getting vacuumed down to there. If you're a bull, there's no point buying in here. Better to buy somewhere, buying a support. So I think we're now only a few points off the 92, okay, so less than 10 points. We might need to go down and touch it. Oh, g'day, Mike. Yeah, he's great. That article's huge. It's fantastic on the step-by-step. And actually, it was cool because Brad was talking me through some of Ali's notes and how detailed he's been in breaking the course up. And it's just like, yeah, very inspiring. And certainly his presentation highlighted I said to Ali, your presentation highlighted a lot of micro gaps in my own knowledge. I've got like 20 pages of notes of areas I thought I was pretty good on. So what do you do here? We've got 4 consecutive bear bars. We're back down the low of a trading range, and this is like 10. Great looking bull bar at the highs, reversed. Now we've got a great looking bear bar. So selling down here is more difficult because you've got big risk, high probability, low reward. Oh, I think Ali will do more. I think he looked like he really enjoyed the presentation, and there was a lot in it. He had heaps of material in there, so I'm sure there'll be plenty of demand for it. Only if he gets good marks. So what happened on 16? 16 big tail below. No one wanted to continue selling. We've got possible 15 lows of magnet up here to test, although I'm not. I don't think I'll sell there. It's just back in the middle of the range. Can the bears get follow through bar here? This is looking scarily like the chart. Pretty close. But not super bearish, because on this we had pretty good sell signal and 3 consecutive decent bear bars. So let's see, full swing or continuation. Okay, to be short, you can be on the sell below 13 or 14. You can be on the buy above 7. Impressive if you held it that long, but you probably should have got out below 11, or when you saw 13. I think definitely reasonable to get out there. Or when you saw 13, I think definitely reasonable to get out there. Oh, he doesn't have time. Oh, that's a shame. Maybe he could record one. That was very fun to do in person. Oh, that's easy to say, right? Yeah, get rid of that. So Al talked a lot about different building blocks, and he was talking about patterns at one point, and he was saying there's a habit for traders to look for the perfect pattern, and when it doesn't appear, there's hesitation. So when the pattern's perfect, then you see the setup, and then you take the signal. But he said if you kind of have a flexible mind to see it as the market is pushing in one direction, it's pushed twice in one direction, it's pushed 3 times in one direction. Because it's pushed 3 times, it doesn't matter whether it's flat, whether it's sloping up, it's sloping down. What it's telling you is the price doesn't want to go there. So you need to be ready to execute on something that doesn't look exactly as you'd like it. So, and that kind of really helped me because I had that in my mind about patterns. So, saying this, we've got 3 pushes down. So whether the wedge is flat, steep, sideways, price is trying to go down and it's not going there. So eventually, if you're short, you're going to question whether you want to still hold your swing, whether you've still got all the risk above, and question mark on how far it's going to go down. Do you switch to scalping, or do you leave? And the same here with the wedge top. Great first leg, and then we've got high 1, strong, didn't get too far above the first swing, and then so high 1, high 2, great entry bar, and then consecutive bear bars up the top here. So up here, bulls exit, probably not enough to short, then you get another bear bar closing on its low, bears start to sell, and then you get failed buy signal and then drop down. So that I think was quite interesting. So yeah, get the encyclopedia and look through that because it's I think very valuable. I think he said he's going to update the encyclopedia as well, or he's going to write some new material. Maybe Brad's on the line. Hi mate, have you got Do you know if he's writing in, is it new material or is it a different setup? Perfect trade setups. Oh yeah, we were having a good laugh about this because Brad and I both go onto the site and type in Ask Al and dig up the old transcripts, and they're great. Some of the write-ups have been fantastic. What do you do here? We're coming up to the second hour. What a surprise, big up, big down. So hovering between these prior breakout points on the hourly, and then it's going to be difficult to get any other information out of that if it's directly up and directly down. We do have 1, 2, 3, 4, 5, so that completes the expanding triangle as I understand, but we've got 2 pushes up, 2 pushes down. So bull's looking for a buy signal, but 17 wasn't it. Bear's looking for a continuation and a break below. So around bar 18, I think 18 says 80% chance we're seeing the high or the low for the day. What will it be? Yeah, highly recommend to rewatch the wedges video. Yeah, it's so funny because yes, but I can't watch them too many times. I watch some of them and I'm like, I know I've clicked, I know I've seen this, but it's like I'm seeing it for the first time. You know, it's like you can only absorb a certain amount of information. So interesting bar 18 because we're inside bar 17 but tails, so very little bull pressure. I suspect there'll be more buyers down on the lows and 5 points lower. But now we've got a bear micro channel, 3, 4, 5, 6, 7. So, you know, the first bar to go above the high of a prior bar, more likely to be a sell signal. So I might leave the first bull setup, see if it's a trap. You often get that on wedges, and I think you could drive a beginner insane. You wait patiently for the setup, you take it, goes one tick, goes below your entry, you get stopped out, and then you get an ordinary looking buy signal, and that's the one that takes off. So yeah, generally shrink my position size if I'm doing that. Bear legs most convincing today. It's almost like we have to get back to the open. Just extreme balance, Tai Chi sign, total harmony, which is not what we want as traders. We don't want harmony. We want, if everything's equal, we can't make money. We can't buy now and sell high later. We can't sell now and buy back later. So harmony sucks. And the good thing is that people don't want that harmony. They want some kind of edge. So the algos are our friends. Yeah, I agree, Rose. I think if 18 can be a reasonable sell signal, we're really struggling to close below here. Can you buy on 19? Well, 18 is a bear bar, closing below its midpoint, so it's a sell signal. So better to buy above a bull bar, closing on its high. And also good to wait for second signals in this kind of sideways price action. Okay, so 18, continuation sell, but sideways, bear bar, doji, bear bar, probably going to be inside. 19's a good looking bull bar. Can you buy it for a swing? Potentially. I think I'm going to wait for the second one though. Trading's never that easy. So you can see the sellers were already there waiting, didn't get triggered. Bulls got out. 3 points. So we're shrinking the targets. So there's the bull bar. So we're now tick above the high of 18. Will bears sell the micro channel? Some bears already did. So what if we get outside bar 19, back to breakout mode. Feels like we should touch the Globex low, right? It really does. I mean, we really have to do some movement to get up to the Globex high. Yeah, Tom's book's very interesting. Great examples and disciplines on some of the mental side of trading, and I think one of his exercises is to you close your eyes and you visualize being in a terrible position, like you've entered correctly and it goes terrible, and you imagine you're trading a big size and your heart rate goes up. And so it's like, even though you're not even in a trade, you've got zero money at risk, the body's instantly like, oh no. So it's like, if you can then train the body, calm it down, okay, and then you kind of train that muscle. I thought that was fascinating. So, and Tom spends a lot of his time sharing mistakes. I thought it was really interesting because I thought I was the only person that liked to fight a trend. So it was nice. He put a slide up, and he was fighting a bull trend all day. So when you see really successful guys like that, and still improving and cleaning up mistakes, I think that was really really cool to see that. So we went above 18. We've had 2 hourly bars. We're back down at the open. So what's more likely? Measured move up, measured move down. I've got the daily EMA down here. Might be too far to go today, but a lot of buyers. We got back to 4,000. So funny, in Taiwan, I got this advertisement on Facebook, and it was like, buy US stocks, this is a great time, invest in this thing. And then I had all these friends saying, oh, you're in trading, what do you think? And I was like, that's outrageous. It's just like a lot of targeting for investing in the US stock market. They're like, give us the money, we'll invest it, and we'll tell you how well we're going. Just straight up scams. So bar about to close. It was a bull bar, not quite what the bulls wanted. Did get above 18. So like some bulls looking to buy, but I don't think that's good enough. Might have some traders taking a chance. Very small gaps. Might come up and test the 15 low. Go sideways here. Yeah, the audio book's funny because it's not his voice. It's an American guy, like a lot of Kindle stuff. But yeah, it's cool. Do many people in the room get into marked upwards and stuff? I think I've read most of his book, Trading in the Zone, a long time ago. Looking like we're going to get a second leg down, I think. If you had to be in, better to be short. We're on the sell below 13. Bulls looking for a swing up. One thing we want in the conference is people's Discord handles should be on a name tag somewhere, because a lot of us only know the handle, so that was really funny. Can you buy above 19? Big tail on 19. You're reasonable. You're buying in the bottom of the trading range. So, if 19 is the first signal, you can take a chance that we'll get up to the moving average, or you can wait for a better signal, wait for consecutive bull bars, or at least a bull bar closing on its high, like 7. So your bulls buying the market, buying above 19. And we just close that gap. So bull bears sell there. We are 6 or 7 points below the moving average. Yeah, I thought that was a reasonable sell up there. So that's the first signal, 1920. So if you sold the high at 19 or you bought the market on 20, this is not what you're looking for. So if we go up, come back, or start to go down, that might start the rest of this bear leg. But can they get consecutive bull bars? If it's a terrible buy signal, then it's potentially a much better sell signal. So you've got traders looking at 20s not closing above 19. I don't want to be long there. I want to be buying much lower. I'm buying in the middle of a range. Better to take a small loss here and look to buy below 18, 19. Unlucky, they got 4.5. It's going up from 4. So that's good. As the triangle increases, the targets get bigger. So that's, you know, a bonus for us for being patient. A bonus for us for being patient. Mike, what was your entry? Missed your stop by 2 ticks. Sweating it. Okay, so 20 closed on its low. Outside down bar, so reasonable sell signal. Closed only just below 19, but equal to 18. So not as bearish as the bears would probably like. Probably some buyers below there. The method being I'm buying below a bull bar, low in a trading range, and I thought 20 was too big for the bears to sell the low. Wasn't particularly scientific, but I'm only taking half a position. I think I'll get another chance to buy, hopefully. It's always annoying when you take an entry and then it flicks around your price for a while, because then you start to question whether that was a great entry or not. Usually if the market gives you lots of time to get in, you're potentially doing the wrong thing. Every bar today below the moving average. So that's bearish. Gap down is bearish. That's bearish. Gap down is bearish. Oh, okay, it was kind of scientific. I was buying the open. Thanks for reminding me, Speedo. I'd forgotten we were back at the open again. So we've 2 pushes up, essentially 2 pushes down. We might be forming some kind of wedge here, but it's basically sideways, so pretty unclear. 20, great looking sell signal down the bottom of the trading range. So bears wanting to swing it down. So can you sell below 20? Well, if you're selling below 20, you've got a stop that is 24, about 7 points above. Selling low in a range, but it is essentially a tight bear channel, this part at least, but low in the range, so it might be good for a scalp. Don't think the maths is great. Within slashing distance of the Globex low, but I don't think doesn't want to go there. Huh? Speedo's convinced. 21's a good buy signal. It'll be a second buy, but bull's unable to close on the highs. So well, I'm disappointed. My entry's been sitting at the same tick for 4 or 5 minutes, so that's not a good sign. Maybe it is, but it's good that we haven't closed below it. Has anyone stayed long today? Difficult to make money buying. Has anyone stayed long today? Difficult to make money buying. No, yeah. If you missed the first 2 hours, it's okay, because we're back there. You get another chance to see it. So, will this be a reasonable buy signal for the bulls? 15 seconds. Can we close on the highs? Yeah, nice. There you go. So, reasonable buy signal, but sideways for 4 bars. So, bulls probably want a second bull bar, at least something that closes above 21. But reasonable swing. But when we say swing, that the targets have been about 4.5 points if you stayed in. So, we went long at 31. Oh, are you on the high of 10, Rudy? Well, where have been the key prices today? The open. So possible buyers at the open, 5 points low, 10 points below. So stop entry traders today, you could have bought above 3, you could have sold below 5, the buy on 7 or buy above 9, taking a chance on the swing. If you bought above 10, hopefully you got out. Otherwise you lost on 13, you could have sold the 13 low. And that was the swing of the day, the double top. And then not too much down here in terms of sell signals. And now we're getting bars closing on their lows down at the bottom of the trading range, just where we don't. No surprise that the swing would take us up to the moving average there, or if you're drawing it from, I generally use the bodies of the bars as like a first target, a bit like when ours drawing a measured move, he uses the lower high first. Flat's great. You know, Ali said something great about that, Rose, because he said most traders think it's bad to be flat. Like he said, flat is great. Flat's the best place to be. Flat's an asset. You know, as a scalper, you want to be flat, so you've got a chance to take trades. It's like when you're already in a trade, you can't take another one. So I thought that was quite cool. So I bought below 20 on 21. I saw 21. I'm really happy. I'm seeing 22. And it's going sideways. It's probably going to come back to my entry. So, but it's not a great sell signal. So I'll hold it for now. Not an add-on kind of environment. I wouldn't recommend. I don't know how many people in the room add on to their trades or scale in. Interested to know who does it. Psychologically, it's quite difficult. Easy to get wrong. Easy to add way too early and just add additional risk without changing probability. Yes, something good to practice with smaller positions, and I think in decreasing sizes. People watch Tom trade, and then he adds in equal sizes. So his position, which is pretty heavy, actually it's a very heavy position in comparison, and then adding 3, 4, 5 times, so he can be long 500%. But if you're trading your regular size, you are not going to be comfortable and relaxed at 500% of your size. I don't think. Yeah, too early, exactly. So what happened here? We had the second entry buy on 21, 0 momentum above. Bulls trying to get a second bull bar. Yeah, thanks for being honest, Jay Hoss. It's yeah, easy to do. Low probability of any racing just right now. Coming up to nearly 2 hours. 22, very small bull body, but so just technically a doji. Very small bull body, but so just technically a doji. So it wasn't bearish, so still pushing up. Will there be sellers above 22, above 20, moving average? Very small bull body, but so just technically a doji. So it wasn't bearish, so still pushing up. Will there be sellers above 22, above 20, moving average? Oh, the urge to close 4 points is very high, but I will stay strong. Strong. Mainly because it's still not a great sell below the open at this point. If 23 is a big bear bar closing below the open, I will be sure to get it, which looks like it's about to do in about 1 second. So what do you do here? You could be on the sell, swing from 13. How many points is that? Down from up there. Okay, 20 points takes you far down there. Okay, so maybe. So bulls unable to get consecutive decent bull bars, but a reasonable signal. So let's see. Well, 23 close on its low, but that final push down of the Globex low and maybe below. So high one, low one. Is it high one, low one, high one? I think technically a low 2 below 22, but it's a bull bar, bull doji, so not super strong at this stage. Let's see. Battle of the open of the day. So we might click 5 points past it, above it. Let's see. Oh. Someone's hacking the feed. They're breaking into the Albrook satellite. Need to get some high intensity security here. I'm safe. I'm still long. I didn't close. I was waiting for a bearish close. So I thought about it. It's amazing how many times you can think about your position in a 5-minute bar. It's that hyper speed. So will it be bear leg, second leg, sideways to down? The 10-minute chart looks like it's still a lot more to go, but 1, 2, 3 at the open, pretty tight. So nearly outside down. Yeah, 5-minute bar, a lot of time. So good for the bulls if we get a close over 22. Can they get an outside up? Remembering back in the middle of the range. So can you buy above 23? The same thing, we get a good big bull bar in the middle of the range. I think we get continuation. I would look to buy below a bar if you can. Take a chance for going up. Okay, so we got the bull bar, but small tail above, but 3 consecutive bull bars, so might get a little bit more up. Exactly to 5 points. Okay, so what do you do on 23? I think 23 is a difficult bar to sell. Might have buyers 5 points down. I don't know. Basically got inside bar, outside bar, breakout either way. Yeah, good looking signal bars are always in the middle of the range. Yeah, and the best ones are right at the extreme where you don't want to be. You know, so you get big bear bars on 6, consecutive bear bars, that's what we want to sell. But down 1 tick above the low, no good. And then 10, great looking bar because we've got consecutive bull bars, but at the high, so it was okay to buy, it just ended up on 13, you had to exit. And then 20 as well, outside down, usually a great sell signal, right at the place that is difficult to sell. So will traders buy above the high on 23? Oh, 23. Oh, Session disconnected. Fantastic. There we go. So eventually, if you're trading always in, you've got 3 consecutive bars. So, you know, you want to get in, but none of them closing on their highs. So let's see. We might finally touch the moving average, 3 points above. So Dowd said in his 30 years of trading, he's never seen a day go the whole day without touching the moving average. Is that right? Oh, that was a good trade, Rose, I think. Fine there. I think it was high probability. Okay, so we're up at the 20 high. Will we get to the moving average? We are 22, 3 points above, maybe 4 points. Good bar for the bulls. So what do you do here at the moving average? I still think there'll be sellers at the moving average. Lots of computers patiently waiting to sell it, but happy to be proven wrong, not sure. Are we coming up here? Patiently waiting to sell it, but happy to be proven wrong, not sure. Are we coming up here? Yeah, it's good points, Peter. They weren't able, you know, essentially 3 pushes down, or at least 2 decent pushes down, unable to get below the low, get the Globex low. Yeah, sellers at the 12 low, sellers at the moving average potentially. Sellers at the 12 low, sellers at the moving average potentially. Then again, it's always a bit difficult to sell for bull bars in the middle of a range. So if this is a good bull bar closing on its high, I don't think it's a guaranteed sell up there. I think that can be helpful as well. Like, we use a lot of targets for scalping. I think it's a fantastic way to trade because you can take many small trades and manage them, and you know, you can get your points up and you can be consistent that way. But it can sometimes help to look at where the exit points are, or whether an alternate trade has set up in the opposite direction. Like, is there actually a sell signal, like on 13, reasonable to sell? So if you're long, you should get out. And if you're looking to sell consecutive bars, sell. So, but I'm long here and I'm trying to work out what to do with my position. So sellers at the 20 high. Probably buyers down here, I think. Let's see. So 1, 2, 3, 4 consecutive bull bars. Bodies are increasing. Can we close above 20? Snowfox, if I bought the 20 low, my stop is 5 points below the Globex low. So it's a wide stop, and then because I entered a size where I can scale in if we get to the Globex low, I can look to enter another position there, betting that there'll be more buyers there. But if that doesn't work, I'm quick to get out. I just say, no, I'm wrong. But the logic on Snowfox for that one was that it was a great sell signal, but at a bad location. But Rose's was a high probability signal. I think, Rose, did you get it on 21? Or where did you get it on? Yeah, 23 high, yeah. Because now you've got 3 consecutive bull bars. So not a great place to sell. So what do you do here? Bears want, what would they need to sell? I think you'll get buyers down here. You've potentially got traps bears, potentially. I think they have plenty of chances to get out. I think if you're short of 20, you probably should have got out above 21. And if you didn't, you got a chance to get out on 23. So if you didn't get out there, you've now got this happening. But if you're stuck in a position, and you usually get a chance to get out, but it's usually very quick. And then this happens where you get bars that don't quite overlap, and then gaps form in the opposite direction. And that's why scaling in can be very difficult if you are if you take the reasonable entry, which I think is what what Al says, is that entry is reasonable, you usually get a chance to get out. And in his presentation, he said he thinks the probability is even higher than 80% that you can scale in and get out without a loss. So 25, are we inside on my trading terminal? It's inside the bar, but on trading, oh yeah, it is just okay. I just got out of the high of that bar for 8 points. So it's likely it's going to go up into there. I think there could be some sellers there, or this could be a huge spike and go up to the top there. But I might look to get back in. But not an obvious sell signal as yet. So better to be long or flat. And if you're on the sell from 13, I admire your patience for the second leg, but you have a few chances to get out. I think 21, certainly above 23. But if you're back here, what do you do now? We're still long, so. There we go, another good bar for the bulls. So we've closed above the moving average. So 5 bull bars, bodies, we're getting bigger on my terminal, but here, reasonable bodies. So Al usually likes to wait for 1 or 2 bull bars closing above the moving average before looking at always in long, as I understand, but there's 5 in a row. So if you're buying here, stop below 23, long, as I understand, but there's 5 in a row. So if you're buying here, stop below 23, we'll see. So the first bar in 20 that closes above or below the moving average completely, it calls a moving average gap bar. It's basically a chance for the trend traders to get back in at a good price. So if you're selling here, where's your stop? You're kind of in space. So bears wanting to see some kind of bear signal here, but if it doesn't happen in the first few minutes of this bar, the next logical place will be up here somewhere. Yeah, nice, Mike. I think that's good. I think in this kind of environment, 4s and 5s are the ways to go if you can get it, because you'll often miss it. You know, you're waiting for that 1 point or half a point, and then it starts reversing, and then it can get pretty frustrating because you did everything right. You just missed out by a few seconds. So there's a gap here. So that's on the extended trading hours. I'm just not putting an alert there. Miles away. So bears want a decent sell signal, but you've got 5 bull bars. So not a high probability sell yet, I don't think, but reasonable because you're at the moving average. You know, gap down 80, 90 points. Trading's waiting for a chance to sell. We just plugging the encyclopedia today. Kind of more like which. So bulls want some kind of a bull body here, or a bad looking bear bar. Travis thinks we're seeing a low. Yeah, it's reasonable. Couple of pushes down. They spend a lot of bars. 1, 2, 3, 4, 5, 6, 7, 8, 9 bars. Couldn't break through. So 'Travis thinks we're seeing a low. Yeah, it's reasonable. Couple of pushes down. They spend a lot of bars. 1, 2, 3, 4, 5, 6, 7, 8, 9 bars. Couldn't break through. So 5 bull bars. So probably a second leg. Traders wondering how big the pullback would be. Oh, nice. Rosie, you still long? Chickened out. Took the points and ran. Yeah, totally. Oh, you took profit as well. Yeah, nice. Nice, okay. Mate, Vegemite's fantastic. Here's the problem with Vegemite, is that it's not Nutella. So people spread it on like Nutella, when in fact the correct Vegemite approach is mostly butter with a very small amount of Vegemite. So I went on exchange to France. I lived there for 3 months, and I brought over Vegemite, and I couldn't really stop them. My host family kind of got it out of the jar and just started lathering it on, and I was so shocked I couldn't say anything, and I was like, oh, no, and then takes a bite. Oh, it's disgusting, and then and then as I left 3 months later, they were like really ashamed. They like gave me the Vegemite. I was like, it's okay, I understand. But it's you know, there are tastier things. Like I'll take an almond croissant over Vegemite. Australian, probably, but whatever. 26, moving average gap bar potentially, full bar, shrinking bodies, doji. So 50-50. Will the bull spike continue? We're back at the top of the range. They sold 13. They sold 12. They sold 13. So reasonable part of a trading range to get short. What this chart needs is a few more lines. So there's your thirds. Oh, that's genius. That's genius. Yes. So you know how to spread the Vegemite. Yeah, and the chips. That's professional. That is professional. You should probably become an Australian citizen just for being able to talk through that. Yeah, it's delicious if you get the quantities right. So what's happening here? 27. So traders deciding, well, we're back up in the top third. Reasonable sells around here. Take a chance. We'll go and visit down at the lows. So what would I need on 27 to sell? Big bear bar closing on its low. Well, 26 is not a great sell signal. So I think if I wanted to, I'd probably sell 5 points above 26, but I wouldn't sell yet. I think you'd probably go buyers 5 points below, around this area. Betting on a second leg up, but I think the buy up here will be more difficult to take unless we get 24, 25. To profit 21, 39, 25, and bar 20. Yeah, that's about where I took mine to me as well. I saw that, and then we went past it, and I was like, oh, Tim, what are you worried about? And then it pulled back, and I thought, you know what? We've been in a trading range going sideways for 30 minutes. I'm happy to be out and look for another entry. So still on the swing buy above 21, buy above 23, 24. I think 25 was probably a bit late to buy, but with a wide stop, I think it's okay. But you're basically betting on a swing, getting up to somewhere up there potentially. Oh, that's the wrong one. Somewhere up there. So yeah, it could be one of those 10% days, mate, where we don't hit the Globex low or high. I mean, it's not looking like we're going to get to the Globex high, that's for sure. But still a lot of the day left. So what would I need to buy on 27? Oh, an outside up bar or something. Something that says traders are going, 2 bull dojis are not inspiring to buy. That it is, consecutive bars closing above the moving average. Looks like an inside bar to me. So I think if you're buying there, it can only be for a scalp, but the risk reward's totally off because you're risking 15 points to make 4.5 or 4, whatever, 32 No, less, 3 points. 3 points to get up there. So essentially it's a bad buy above, so it's probably a better sell. But 1, 2, 3, 4, 5, 6, 7, 8 bull bars in a row, I'm not psyched to sell. Oh, you already got 6 points? Yeah, nice, nice. Excuse me. I think also, Ali mentioned an interesting thing about, a breakout or strength through the size of the bars, but also time. Hang on, we've gone. Yeah, looking at the amount of times that the one side's controlled the move. So even if the bars are small, it's just continuous. So, that explains like a small pullback trend. Is this the second leg? Good question, Rambo. If 28 closes above 20, if it's a reasonable buy, then I think you could argue it's a second leg. For me, I ended on 21, so the second leg was basically above 22, 23, moving up that way. So, yeah, that's a good question. Maybe some other people have got that answer. Sometimes it's very clear, and sometimes it's really not. So, so here we have a very strong move down, and then 2 legs sideways to up, and then a strong move down. So that's reasonable as a second leg from that bear spike. But this is a reasonable leg for the pullback. So, there's one leg sideways, and then continuation buys above. That becomes a second leg. It's also one of those trading things that's easier in hindsight. So it's one that's difficult at the time. You kind of take a chance, and then it ends up being correct. So 0 kind of pullbacks really. I mean, 23 is an outside bar and went below the low of the prior bar, but all bull action. So all bear action down, all bull action up. So very trading range. What would I need to buy up here? That is a good question. I think to buy, I need to see some closes up in this area, but I prefer to see a failed bear leg down here. A bear leg that fails somewhere down there or somewhere here, somewhere here. Because also, I feel like 28, 29, 30, a couple of big bear bars closing on their lows, and the bulls might run for cover. So let's see. So if you bought 24, 25, you see 26, you see 27, you've got 10 minutes to get out of your position. That's a long time to consider. Well, that's what I was saying about 28, 29. A couple of decent bear bars. They need to be consecutive and decent. If we had a bar that looked like 13, and we started to trade below it, reasonable sell. But perhaps the first reversal is going to be minor. Not a great bear bar, so that's probably better for the bulls. 3 closes above the moving average. I probably look to buy lower. So bulls buying below it. But probably sellers above the high of 28. So either this is an outside up bar, high in the range, up, high in the range, so 26. Okay, so your limit bulls waited for a bar to go below the low, bought it, now they're at 5 points. Reach the trend line. What time frame? Oh, that's on the extended hours, is it? Oh, on the 15. Yes. Type bear channel, possibly double top bear flag. So that'll be interesting because then you've got multiple sell zones above the 15-minute EMA. Could be interesting. So bulls don't want to hold long above 28. Happy to take the points. Bull selling. Bears no. Wasn't a great buy above 28. High in a range. Happy to sell. A second leg trap. Where's your first leg and second leg counting from? A second leg trap. Where's your first leg and second leg counting from? Yeah, I think I'd agree with Speedo on it's a triangle. Second leg trap is it's generally very large bars. It's what the bulls want in a downtrend, but it ends up being too big. So we go down and we get these great bull bars, 1, 2, and it's exactly what the bulls want, but it's at the wrong location. It's the moving average, and then traders that bought above got trapped, panicked, sell. Everyone sells, and then up back down here again. And then the same here on this bar, you get this huge spike. It's what you're looking for in the wrong place. They're generally more obvious 1 to 2 bars afterwards. So if you're like, oh, how do I know if it's a trap or a trend? Which is a great question, I think. Wait 5 minutes. So 21 to 22. 2. Yeah, gotcha. Okay. So agreement at the moving average. So if you're taking a trade, first target would be 5 points either side. If we get 5 points above it, we're probably coming back. 5 points below it, we're probably coming back. Now we're doing barbed wire, which is sharp and pointy and bad to trade. Sharp and pointy and bad to trade. So 4 bars closed above the moving average, 5 bars, so bulls taking it up the highest. Oh, big bars. It's probably a great sell up here, but I'm not that game. So right up to a trend line. So there are sell orders, 28 high, 12 high, 5 to 10 points above. And we just blew right through them. So if you're quick to sell that trend line, but it's trading that hurts. Isn't that, that's a quote from one of those pit traders. Not recommended to sell huge bull breakout bars. So now you see that bar, can that be a second leg trap? See, depends on the follow through. Was that on 1 minute? Yeah, look at that. So you think you're trading in a trading range, you've got it all under control, and then you're 10 points above where you want to be. So bears unable to get the double top. 28 just wasn't good enough to sell below. No one wanted to sell far below 28 and 29. And now all the bears have to buy back shorts. So what do you do here? The bar is 42, 15 points tall. So you're buying this bar expecting a second move up. You need to trade really small. And remember, we've been in a trading range all day. That's okay, Bob. I think everyone did, because the 4 bars were all dojis before. These are also bad buy signals here. So I think there's a chance we might come back and visit some of this area. But we'll see. That might change the nature of the next hour or so. On a 15-minute chart, that's up at the moving average. We've just launched past everywhere. So 60-minute moving average is very far above. Okay. So bull surprise bar. So if you're scaling in short, most of them exited, is that right? Exited, yeah. They left on bar 30. And bears that are still in, looking to scale back down. Some traders sold the top of the expanding triangle, 5, 10, 15 points above several bars here, betting it would be in a trading range all morning. So measured move targets, what's that? 42, about 10 points away. Yeah, that's right, 1 a.m. 1 a.m. I was surprised by 30. I think I've done well to get through 30 bars of sideways price action. I'm stoked. I've got 8 points. That's great. So big bull bar closing on its high. So better to be long or flat. If you're long, better to trade small. If you were trading your regular position size, you're probably above your percentage of your capital already. But what did you hear? Bulls want to follow through pretty close to a measured move. I think this wedge is irrelevant right now. Yeah. So we've got breakout points above. So do we keep continuing up, close the gap, or do we come back and test below some of these breakout points? Is that 3 hours? Yeah, what time did I start? 10. I've been in 4 time zones. I'm like in Australian time zone. I live in Taiwan. I trade Euro and US, and I travel to the US for a couple of weeks. So I'm trading the US in the morning, and I'm calling people in the evening. Now I'm back in Taipei. It's, I mean, with enough coffee, you can basically be in any time zone. Hey Rose, are you taking the session today? Is there someone after me, or? Yeah, jet setter. The trading lifestyle. It's not as fun without your trading setup. You know what I mean? Without all the stuff. Al loves trading off his laptop, his double laptop setup. And he was like, you need to get used to that if you're going to travel. That has to be the way you trade. So bad follow through on 30. Not surprising. 30 is a huge bar. Probably surprised a lot of people. You probably have some traders at 50%, back at the breakout point, 5, 10 points below, and some traders taking a gamble who have just broken out of the range, and we're going to close the gap above. Which is reasonable when the low from yesterday is 20 points up. Surely when you got to 20 points, someone posted one like in the Facebook, it's like, oh, it's just a record of my trades today, and the profit was, he's like, oh, today was all right, and his profit was like, 120 points. And I was like, it's amazing. I'm just surprised that you're 80 to 90 points in profit, and you thought, no, I'm going to hold. I'm going to hold for that extra 30. But I think it was a demo account, so we'll see. Kai, well done. Well done for being long. You held through the barbed wire. All right, well, I might close up the stream then. So thanks very much. Thanks for having me. It was good we got through the tight trading range, and hopefully everyone got some points. And yeah, it's good fun. If you've got any questions, send through some notes. I'll send all the hard ones to Rose, of course. And yeah, see you again soon. Thanks everyone. Cheers. How do I close this? Let's see. Where's the close button? Oh, there we go. Welcome. Take it easy, everyone. Cheers.